The shifting sands of sentiment. What markets truly reveal, we observe a curious dance in the markets, where the echoes of conflict and the whispers of peace seem to orchestrate a sudden surge. This is not merely a rally, it is a momentary unveiling of human action, a reflection of how quickly the collective mind can pivot from apprehension to aspiration, and what that pivot truly signifies for the nature of value itself. We stand at a precipice, observing the intricate ballet of human action as it unfolds across the global stage. You see the headlines, don't you? The numbers flash, the percentages climb, and a narrative of recovery begins to take hold. Ether, Solana, XRP, they surge, we are told, alongside Bitcoin, propelled by an easing of war fears, a return of risk appetite. But what is this risk appetite truly? Is it a newfound courage, or merely the fleeting absence of immediate terror, allowing the deeper, more persistent impulse of speculation to reassert itself? Consider the mechanism. A global conflict, a palpable tension, grips the collective consciousness. Fear, that primal architect of human action, drives capital to seek shelter, to contract. Then a perceived lull, a moment of respite, and suddenly the very same capital, now emboldened, rushes back into the fray. This is not a change in fundamental value, but a shift in the perceived probability of immediate loss. It is the market, in its rawest form, mirroring the human psyche, a pendulum swinging between the dread of the unknown and the allure of potential gain. We are told that $700 million to U.S. spot Bitcoin ETFs since the start of March. This is a concrete action, a deliberate allocation of capital, distinct from the more ephemeral shifts in sentiment. Bitcoin, you observe, broke above $72,000, a threshold it had previously approached with hesitation. This is not just a number, it is a testament to a growing, undeniable recognition of its unique properties. While other assets ride the wave of general market optimism, Bitcoin carves its own path, driven by a different kind of conviction. What distinguishes Bitcoin's ascent from the temporary effervescence of other digital tokens? It is the bedrock of its design, the very principles of scarcity and decentralization that Mises himself would recognize as foundational to sound money. Bitcoin does not merely surge, it solidifies. It is a store of value, a digital hard asset whose supply is fixed, whose issuance is predictable, and whose ledger is immutable. Its value is not derived from the whims of a central authority, or the speculative fervor surrounding a new application, but from its very resistance to such manipulation. When you see Ether climb or Dogecoin jump or Solana add percentages, you are witnessing the ripple effect. These assets, while possessing their own unique characteristics and use cases, often move in concert with Bitcoin, not because they share its fundamental monetary properties, but because they exist within the same speculative ecosystem. They are the satellites orbiting a sun, drawing their light, their perceived legitimacy, from its gravitational pull. Their surges are often amplified by the very liquidity that Bitcoin's growing acceptance brings to the broader crypto space. The narrative of easing war anxiety is a powerful one, isn't it? It suggests that the market is rationalizing, that it is processing information and adjusting expectations. But is it truly rational or merely reactive? South Korea's benchmark surging 11% after its biggest drop on record. This is volatility, pure and unadulterated. It is the market correcting an overreaction, not necessarily discovering new, enduring truths. The underlying conflict, we are reminded, remains unresolved. Tehran still targets, forces still strike. The reality of the situation has not fundamentally changed, only the market's immediate interpretation of its severity. This brings us to the concept of monetary illusion. When central banks expand credit, when governments intervene in markets, they create a veil over true economic signals. Prices become distorted, and what appears to be wealth creation is often merely a redistribution of purchasing power or a temporary inflation of asset value. In such an environment, the distinction between genuine value and speculative froth becomes blurred. The rally of various digital assets, especially those without Bitcoin's unassailable monetary properties, can be seen as a symptom of this illusion, a chase for nominal gains in a world where real value is increasingly elusive. We observe Wall Street leading the way, with economic data easing inflation concerns. But how deep do these concerns truly run, and how genuinely are they eased? The recovery, we are told, looks tentative. This tentativeness is the market's subconscious acknowledgement that the underlying problems, the debt, the deficits, the continuous expansion of the money supply, have not vanished. They have merely been momentarily obscured by a shift in perception, a temporary reprieve from the immediate pressure. Consider the Strait of Hormuz situation, stabilizing with U.S. tanker escorts, oil pairing its early week spike. These are micro-adjustments, tactical responses to immediate threats. They alleviate the most acute fears, allowing the market to breathe. But they do not address the systemic vulnerabilities, the geopolitical tensions that remain simmering beneath the surface. The market, in its short-sighted wisdom, often discounts the long term, focusing instead on the immediate horizon, on the next quarter, the next news cycle. This is where Bitcoin offers a profound counter-narrative. It is a tool for individual sovereignty, a decentralization of knowledge and power away from the centralized authorities that perpetuate monetary illusion. When we speak of sound money, we are not speaking of a nostalgic return to a bygone era, but of a fundamental principle of coordination, of economic calculation made visible and reliable. The surge in altcoins, while superficially exciting, often masks a deeper fragility. These assets, by their very nature, are more susceptible to the whims of sentiment, to the narratives spun by their creators, and to the liquidity flows that can evaporate as quickly as they appear. They lack the absolute scarcity, the uncompromised decentralization, and the proven track record of Bitcoin. They are often experiments, some noble, some less so, but none possess the same foundational claim to being a truly independent, censorship-resistant, and sound monetary asset. What, then, is the true meaning of risk appetite returning? It is the human impulse to seek profit, to escape the erosion of purchasing power, to find a haven or a vehicle for growth in a world where traditional stores of value are constantly being debased. It is a testament to the ceaseless pursuit of meaning through exchange, even when that exchange is fraught with uncertainty. But the discerning observer understands that not all vehicles are created equal. Some offer a temporary thrill, while others offer a path to enduring value. The question is not whether these assets will continue to surge in the short term. The question is what they truly represent in the grand scheme of human action and economic reality. Are they fleeting reflections in a distorted mirror, or are they fundamental shifts in the landscape of value? For us, the answer is clear. Bitcoin stands alone as the only true store of value, the only reliable cryptocurrency, the only true collateral in a world increasingly starved of sound money. If it's not Bitcoin, it's a speculation, an experiment, or a distraction from the enduring truth. We are Blocksonic. We don't predict the market. We read its memory. Never forget, Bitcoin is only yours in your cold wallet.